Hello everyone, welcome back to our financial management marathon. And we were uh, studying the working capital management chapter, okay? And as I had told you, I have divided this chapter in two parts. We had completed part A, and today we will be doing part B, okay? So, welcome once again, and I am Professor Fatema Kagalwala, and I have been teaching practical subjects for company secretary course, and I've been teaching accounting management, financial management for over 10 years now. And it has been my favorite subject, and trust me, it is one of the most scoring subject in your exams. You all can get exemption papers because you get you can solve it practically. There is also theory, but practical questions help you gain more marks. Okay, so the process will remain same today as well. I am going to first we will go through the entire understanding of the concepts. Actually, most of the concepts I have completed in my first part of working capital. Today we are going to focus on working capital statement and operating cycle. So it will be the same thing. We will go through the theory as well. I'll tell you which important theories from your exam point of view. They will ask you this short question. Then we will go through solving some, illustrations and examples. And lastly, we will solve the past exam question. Okay. So let us begin. And I hope that my screen is visible to you and I'm audible enough. You all are able to hear me. Okay, so just you all can give me a thumbs up in the chat box that you all are there along with me. Okay. Now, we was as I told you, we were doing working capital. Okay, for those who have not seen this video, please go ahead and see my part A as well. No problem. Today you attend this, and then later on also you can see the part A. It is totally different, and this is also totally different, though connected with the same chapter. Now, when we were doing that, I had already explained you all what is working capital, right? Working capital is nothing but the capital required for day to day, for running our day to day operations. Okay, day to day operations, we need this capital. We have to keep on paying rent, wages. We need to buy raw materials. We have people working on that raw materials. Then we have finished goods. We generate debtors. We have to make payments for the raw materials which we purchase, etc., etc. So your day-to-day operations, which keeps the business ongoing, is what is all about working capital. Okay. So fixed capital, we did capital budgeting. Fixed capital, long-term planning of the capital, wherein you invest in land, building, plant and machinery in case of fixed assets. And working capital talks everything about current assets and current liability. The difference of which is known as your working capital, your net working capital. Okay. So working capital, this all you can just read as a theory. There are types of working capital. Uh, Types of working capital on the basis of balance sheet and on the basis of time. Now, on the basis of balance sheet is basically what? It is the gross working capital and net working capital. Net working capital, current assets minus current liability. Gross working capital talks only about the current assets. How much stock do we have? How much cash in the hand? How much is the cash in the bank? How much debtors are there for us to, trade receivables? That is what is the gross working capital. All these information we get it from our balance sheet. And based on the time, working capital can be permanent in nature. Regularly, you need that much of liquidity, okay, so that you can run your business smoothly. That is always there. Permanent working capital is always there in any given firm and organization. It has to be estimated, it has to be provided for. If there is any shortfall in the working capital, you can go ahead, decide to take a loan or sell your investments, okay, and have that in place. Okay, so there has to be a permanent regular working capital estimated and decided based on your operation. And there is something known as a variable. Okay, this is variable or temporary working capital, it may be needed because you have a seasonal demand, okay, and it is some specific demand, okay, so that can be variable in nature. So balance sheet, gross working capital, current, your total current assets, and current assets minus current liabilities is your net worth. Okay, now see this diagram. Say based on your time and amount of working capital required, there will be something which is constant, fixed working capital, permanent. This much of amount, 1 lakh rupees per month is needed for us as a working capital. And rest can be in form of a variable. It can be based on your demand of your products. There is a decline in demand. Again, there is an increase in demand, decline in demand, etc. It can be. And based on that, there can be a variable working capital. Generally, working capital, permanent one, keeps on increasing. Okay, because obviously you are not going to stay consistent only with making, okay, only 1000 of units I will produce and only 1000 I will sell. Obviously, you will strive to having more sales, no, increase in the percentage of sales, increase in the percentage of profit. This is what the business does. They want to grow. So, as and when you grow, obviously your working capital needs will also increase. Okay, there will be fixed costs, there will be more materials you are acquiring, there will be generation of more debtors, and hence the variable working capital will also increase accordingly. Now, importance of working capital, this you all can read and prepare yourself. I have made it in short. Okay, why do you need? Because it makes the business solvent, it increases your goodwill, easy loan, cash discounts can be given and availed, regular supply of raw material, payment of salary, wages, exploitation of favorable market conditions. You are able to face the crisis if you know the working capital needs from currently right now only, and quick and regular return on investments and high morale. Okay, so these are the basic. If it may be asked, it just you can read, you can write it in your own. Factors determining working capital is also something else. We read, can be the nature of the business. You need to understand what is your nature, how much you are going to need, which industry you belong to. Based on that, how much of stock is going to be there, or if you are into manufacturing, you are going to buy raw materials. So raw materials also will be in stock. Then work in progress will be there. Then there will be finished goods. Say if I'm into manufacturing of shirts, okay, okay, I'm manufacturing shirts. So for me, in my stock, there will be raw materials of the cloth material. Na? Then there will be some work in progress. Shirts are made, buttons are not yet put. Right? Or, the shirts cutting has already been done. Stitching is yet to be done. And then there will be finished goods where shirts are ready to be sold. Be out from my warehouse and to be sold. So this is the nature of the business. Depends on that how much working capital you are going to need. Then based on your size and scale of operations, what is your length of your production cycle? This we will understand when we will do a sum. Okay. Production cycle is something from where you sell the products until the time you receive the money and you make the payment to the creditors. What is your cycle? How many days is that particular process take? Then seasonal variations, working capital cycle or operating cycle again. To see this cycle. We did a sales today of what? Finished goods. Okay. So now when I am doing sales of finished goods, there is some accounts receivable which is being generated. Say if this accounts receivable realizes I get the payment from my debtors, there is a cash generated. The moment this cash is available with me, I will go and purchase my raw material. Once I will purchase my raw material, I will put that raw material for work in progress. That will again in turn have production done of finished goods, and that production will lead to my sales again. Correct? This finished goods, then I will be able to sell it. Moment I sell it again, I will generate debtors. Okay, those debtors will then again realize my payment. That payment I will make it to, I'll purchase raw materials. Then again there will be production process, there will be work in progress, again finished goods. So this is the operating cycle. The speed at which one cycle gets completed determines how much long working capital requirement you have. Okay, then firm's credit policy, rate of stock turnover. How much time does the stock stay in your warehouse? Does it stay for 2 months, 3 months? How fast is your stock moving out from the warehouse for the purpose of sale? And then you have business cycles, rate of growth of business, earning capacity, dividend policy, and any other factors. Okay, so this entire thing, factors determining working capital, is just a read. Now this is important. Okay, mention the heading. The heading is negative working capital. Negative working capital, and they ask this in exam, okay, in form of theory for 5 marks. So I have given you all the answer also in the form of 5 marks. For this 5 marks you can write this, okay. So negative working capital will arise in such a situation where your current liabilities will be greater than your current asset. Only then your working capital will be minus. Otherwise, what is working capital? Current assets minus current liability. So say if my current assets is 2 and current liabilities is 1, working capital is 1. But if it is vice versa, current assets is 1 and working current liabilities is 2, my working capital is going in minus, negative. In most cases, this indicates that the company may face financial difficulties as it might not have enough short-term funds to pay immediate obligations. It can lead to increase in borrowing, delay in payment of the creditors, low credit rating, increasing of the interest cost, etc. However, not always, but working capital is not always a bad sign. In certain types of business, it actually reflects high efficiency. High efficiency means what? Companies that sell their goods quickly or receive advance payment from customers often operate smoothly even with negative working capital. So those companies who have already sold the goods or have already got the payment in advance and still the current liabilities are more, they will operate smoothly only because they have already received money. So today it is showing negative working capital, but they are receiving money in advance. No, these business collect cash from customers before they need to pay to their suppliers. So from the balance sheet you feel, oh, current assets is 2 rupees, current liabilities is 2 rupees, and asset is only 1 rupee. With the balance sheet you find out, oh, this is negative. But not necessarily negative is something a bad thing. A good example is Walmart. Suppose Walmart buys DVD from a supplier and must pay the supplier after 30 days, means he's got the credit period of 30 days to pay. Walmart manages to sell the DVDs to the customers within 20 days. Okay, he is already able to finish this sale in 20 days and he has got the credit period of 30 days. It receives money before paying the supplier. In this case, Walmart can run its operation efficiently without large amount of cash. Even the working capital may appear negative. Okay, thus the key point is that negative working capital may indicate financial trouble depending on the business, but in a fast moving or advanced payment business, it can be a sign of efficiency and quick cash flow. Okay, now they have given some case study of HUL. You all can go ahead, and this is taken from the module. You all can go ahead and read this case study if you want. You can even put this case study, a short note of this case study in form of your answer whenever negative working capital is. This is some of their favorite question, negative working capital for theory. Okay, now managing working capital, we have done this in part A. We did management of current assets, we did managing stock, we did management of cash, we also did management of debtors receivable, correct? We did policy changing. Then current liabilities, profitability, risk and liquidity. Now, current liabilities, there is no such management as such, but we are going to make a working capital statement to understand how much is our working capital and how much profit or risk or liquidity does a business is actually having. Okay, so these are the dimensions, and now there are the methods. So this particular part talks about methods of calculating working capital requirement. Okay, there are 5 methods given to us. I'm going to do all the 5 methods with. There are 5 methods. This is exactly what is given in the module, and this is what we are going to do, and we are going to solve one example for each type, in fact one or two examples for each type, but trust me, working capital statement is very simple. It has it is not difficult at all. You know, students keep on messaging me saying working capital very vast, it is very difficult, but it is really really simple. Because once you have understood the concept, like how we did in part A, we did stock management, we did debtors, we did cash, it is the same monotonous thing and same questions getting repeated. There is nothing new to it. Similarly, even working capital requirements, these are the 5 methods. In that, the first 2 are only theory based, and the last 3 we are going to solve. These are more practical, and they will ask this. This is definitely, if it is being asked, it will be asked for 50. Okay. So this is what we are going to solve, and this first 2 are basic theory. So one way of calculating or assessing or estimating working capital is you take some percentage of sales. So you are making 1000 rupees sales, you take 10% of it as working capital. We'll say that okay, 10% is going to be 100 rupees is going to be my working capital requirement. Okay, so it is a traditional method determining the working capital. It is the relationship between the sales and the working capital. Okay, so say as the sales of previous year assumed to be the base, and all the current assets and current liabilities of the previous years are termed in the proportion of the sales percentage. So you are going to take the previous year's sales and previous year's assets liability and calculate the ratio between them. Okay, and then expected sales of future, the current assets and current liabilities will be then calculated. Okay, so useful for projecting relatively short-term changes in working capital. This is not recommended for universal application because assumption of linear relationship between sales and working capital is not always good in all the cases. So this is one of the traditional method where you establish a relationship between the sales and the current assets and current liabilities. Then there is regression analysis method. Okay, now regression analysis method also establishes relationship between sales and working capital. Okay, so it is a technique to estimate your future working capital requirement. There will be one independent variable sales and one will be a dependent variable y, working capital. Okay, so it will establish a relationship between the sales and working capital. Percentage on sales method was also the same. They were establishing a relationship between sales and current assets and current liability. Current assets and current liabilities is nothing but working capital. So here regression analysis, they establish a relationship between sales and working capital. Now how is this relationship being expressed? You all need to just know that much, nothing else. Y is equal to A plus BX. Okay, where A is the intercept of regression line and B slope showing the rate of change in the working capital due to the change in the sales. Okay, now say for example, suppose your regression equation for the company is stating y is equal to 5 plus 0.3x. Okay, where y is working capital and x is sales. If the expected sales next year are 50 units, then what will be your working capital? Y is your working capital, right? Then this is the equation. Y is equal to 5 plus 0.3 of x. X is your sales. So based on this equation only, we are going to put this x. Sales, they have given me 50 units. Okay, so it will be 5 plus 15. It is going to be 20 units of working capital, right? One more example. Say your regression equation is working capital is equal to 0.5 of sales. X is sales. And expected sales are 40 units. Then how much will be your working capital? Y will be 0.5 into 40. 20 my working capital. So if I am making a sales of 40 units, I need to have working capital of 20 units. Okay, so regression analysis, it's just a reliable and quantitative method of working capital requirement, which is not generally used in long run. Okay, for short term small businesses, it might be used. But what is important is this. Okay, these methods, the last three methods are very, very important, because you will see that how based on your requirements we estimate the working capital. Based on what is the business, we kind of find out what is the working capital. So we will do the total of all the current assets, we will do total of all the current liabilities, and the difference of both we will get the net current assets, or you can say working capital. Okay, now let us read one question. There is a performer cost sheet of a company and they are providing us with this following information. Raw material is 80 rupees per unit, direct labor is 30 per unit, and overheads is 50 per unit. So the total cost of production is 170. Profit we are putting 30, and then the selling price of that one unit is becoming 200 rupees. There are further information regarding all this they have given. They are saying that raw materials are in stock on an average for 1 month. Means before they are put to work, raw materials stays in the stock. Materials are in process on average of half a month, and finished goods are in stock for average of 1 month. Credit allowed by the supplier is 1 month. So when I'm purchasing raw materials, creditors are giving me time of 1 month. And credit allowed to debtors is 2 months. And when I am selling that product, I am giving my debtors 2 months time. Lag in payment of wages is 1/2. Lag in payment of overhead expenses is 1 month. Means the expenses for the month of December I will pay in January. 1/4 of the output, 1/4 of the output is sold against cash. Okay, so that means balance 3/4 is credit sales. Cash on hand and bank is expected to be rupees 25,000. You are required to prepare a statement showing working capital needed to finance a level of 1,04,000 units of production. You may assume that production is carried on evenly throughout the year, wages and overheads accrue similarly, and time period of 4 weeks is equivalent to a month. Okay, very easy. There is lot of information, but all this information put it in the working capital statement. A working capital statement is always going to be current assets, current liability. In almost all the sums, in your current assets will be stock, debtors, and cash balance if they have given, right? And in my liabilities, it will be current liabilities, that is your payment to your creditors and overheads. This will be fixed. There will be nothing more than that. Okay. But in case of stock, I am into manufacturing, my stock will be of three types. One will be of raw material, stock of work in progress, and stock of finish. That is it. In case of stock, I will have three stocks, then debtors, cash, etc. is not a problem. So only stock you all have to understand. Okay. So see, I have made this working capital statement. You all can make it in the same manner in the exams. Write the particulars, show the working note in the center, and then write the amount in rupees. Okay. In current assets, start with stock always. Which stock will I take first? Raw material. Okay. Now see. Raw materials are staying on in an average, they are stocked for 1 month. Right? What is the amount of raw materials? I'm doing everything for 1,04,000 units. Okay. They have told me do this working capital statement. How many units? 1,04,000 units. So, stock of raw materials will be 1,000 and So 1,04,000 units of the production, evenly it is happened throughout the year. Okay. And they are saying 4 weeks is equivalent to 1 month. Correct? That means how many weeks I have with me? 4 weeks equivalent to 1 month. So 1,04,000. We will do it, divide that by a week, number of weeks, 52 weeks. So per month will be 2,000 units produced or sold, whatever, 2,000 units. I will take 2,000 units of production. Now price for each of them they have given. Price they have given me for each of them. Raw materials is costing me rupees 80. So 2,000 into 80, that will be my cost, right? And it is staying in the warehouse for how many months? 1 month. Okay, it is staying in the warehouse for how many months? Staying in the warehouse for only for an average period of 1 month, and 1 month is equal to 4 weeks, right? So 2,000 into 80, that is going to be how much? Amount is 1,60,000. Into 4 weeks it is staying in the warehouse, so it is 6,40,000, right? Then stock of work in progress. Now whenever I will do work in progress, I will take the full cost of raw material, and for labor and overheads I will take half of direct labors and direct expenses. This is how it has to be done. Whenever you take stock of work in progress, take raw materials cost completely. Okay. But take only half of direct labors plus direct expense. Now stock of raw materials we all know 1,60,000. Why? Because it is 2,000 into 80. Plus half of direct labors and direct expenses. Now how much is my direct labor? 30 rupees. Correct? So it will be 2,000 into 30. That is 60,000. And overheads is 60 rupees. So 2,000 into 6. 1,20,000. So 1,20,000 plus 6, divide that by 2, will be 90,000. Okay, 90,000 plus 1,60,000 is going to be 2,50,000. And stock in progress is remaining in the materials are in process on an average of half a month. Half a month means what? 2 weeks. 2 weeks. Write it over here if you all want. 4 weeks. Okay, we will take full cost of raw materials, and for direct labor, direct expenses, add it and take only half of it, because this is the formula for stock of work in progress. Okay, so this is going to be 5 lakhs. Stock of finished goods, we will take the total cost of production or cost of goods sold into the period. Now what will be the total cost of production? They have already given me 170 rupees. How many units we are having? 2,000. Right, and they are staying in the stock on an average for 1 month, means 4 weeks. 4 weeks. So 2,000 into 170 into 4. I'm taking all in form of weeks. It's going to be 13,60,000 stock of finished goods. Okay, clear everybody? Now, next one. Next one is debtors. Now, for debtors, okay, write very important. Work in progress formula is fixed. Full of raw materials plus half of direct labor plus direct expense. For debtors, generally, they do not mention anything in the question. Okay, this is generally what they do. Try to take debtors always on the cost of goods sold, COGS or cost of goods produced, whatever is given. Okay, don't take debtors on the selling price. unless they have mentioned. Also, they have kept it open. If you are taking debtors on selling price, please write a note that we have taken debtors calculation on selling price. So now if you see what I have done for debtors is, they are telling me, 1/4 of the goods are sold in cash. So I will remove 1/4 from 2000. 500 I am going to remove. Why? Because 3/4 only is on credit. The number of credit sales only will generate my debtors. So 2000 into 3 by 4 is going to be 1500. I'm going to sell 1500 of my units at a price of rupees 200. It is given. Selling price is 200. I can take it on selling price also, debtors. But if you all will see your module and see the past exam question, generally they are taking debtors on the cost price. For balance sheet, they will take it on the selling price. But for working capital statement, no, they take it only on the cost price. So that we know that exactly how much of working capital we need. They remove that profit element. Okay. So just mention it in a note that you have taken debtors at the total cost or at a selling price. Units into COGS into credit period. Now I am allowing my debtors to pay in 2 months. That means how many weeks? 8 weeks. Here it is written that credit allowed to the debtors is 2 months. So I am giving 8 weeks time. 170 is the cost, 1500 goods I am selling it on credit, right? So 2,55,000 into 8 is 20,40,000. Okay, and the last one, case of current assets, cash balance, they have already given this to, so I have written it directly 25,000. When you will add all of them, okay, stock of raw materials, stock of work in progress, stock of finished goods plus debtors plus cash, total you are going to get of current assets as 45,65,000. Okay. Now coming to current liabilities. Now there are 3 current liabilities. How? Because creditors for the supplies, that is raw materials. Then they have also told me that lag in payment of wages is 1.5 week. Lag in payment of overhead expenses is also 1 month. So there are 3 liabilities which is we are going to take into consideration. So for creditors, how many units of material? It will be 2000 units. What is the price of raw material? 80 rupees. So 1,60,000 and I am getting a credit of 1 month. This 4 weeks. 6,40,000. Lag in payment of wages. 2000 units we are going to produce. And how much we are paying to the labor? 30 rupees. And lag in payment of wages 1.5 weeks. They have told me 1.5. 1.5 week. That is why I have not converted. Don't go wrong. Okay, if you will go ahead and convert this, you will consider this as month and you will try to convert it. No, it will be a problem. You will get 5 weeks and you will try to multiply that by 5. They have already given this in form of week. So 60,000 into 1.5, 90,000. And overheads is for 1 month. This I will multiply by 4 weeks. So 2000 units, overhead expenses is how much? 60 rupees. 1000 into 60 will be 1,20,000. 4 weeks, 4,80,000 my outstanding overheads. So my total liabilities is 12,10,000. So my net working capital will be 45,65,000 minus 12 lakh. 33,55,000 is my net working capital, A minus B. Okay. So this all reading and understanding of English is very important. Okay. First thing, this is the entire production for the year. You will remove per month number of units. Okay. We have 52 weeks in a year. Though they have told me that 1 month is equivalent to 4 weeks, that we have to take it for the calculation of payment of wages, overheads, debtors, etc. But my 1,04,000 units produced across the year, okay, 52, divide that by 50 weeks, going to be 2,000 units per week. Okay, 2,000 units per week I am going to produce. And hence all my amounts are going to be as per the week. Okay, so stock is staying in number of weeks is 4 weeks. Then stock of work in progress, again we have done that also, form of 2 weeks. Stock of finished goods 4 weeks, 8 weeks for debtors. So yes, you have to bring that number of units. If they have given for months, then we will bring it as per the months. If they have given me to calculate in form of weeks, I will bring it in form of weeks. Okay, so each week I am producing 2,000. Once that is calculated, rest everything is given to you all in the question. Okay, so this is a module question, by the way. Okay, and they have asked this type of questions in the past exam. Just the numbers they have changed. Okay, one more sum we will do. Again, working capital statement. From the following information, prepare a statement showing the average amount of working capital by Solvent Limited. Take 360 days in a year. Okay. Now, annual sales are 50,000 units and price is only rupees 2 per unit. Production quantities coincide with the sales and will be carried out evenly throughout the year. The cost is material, labor and overheads 1 rupee 0.4, 0.35. Customers are given 45 days credit and 60 days credit taken from the suppliers. 36 days supply of raw materials and 15 days supply of finished goods are kept. Production cycle is 18 days and material is issued at the commencement of each production cycle. Cash balance equivalent to 1/3 of the average of other working capital requirement is kept for contingency. Okay, fine. Statement of working capital, again current assets and current liabilities. Okay, I am going to start with my current assets. I start with my stock of raw materials. Okay, annual sales are estimated at 5 lakh units. Right. So now I am going to take it 5 lakhs. Okay, 5 lakh units. Amount is 2 rupees per unit. This is the selling price. And here the cost is given. Okay, and I have to do it in form of days and they have told me take 360 days in a year. So how much will be the amount? 5 lakhs units. 1 rupee is the cost. I am taking it for the whole year. Into how much is the amount? Customers are given 45 days credit and 60 days credit is taken from the suppliers. Okay, this is for debtors and creditors. 30 days, 36 days supply of raw materials. This is the stock of raw materials kept here. So stock of raw materials are staying for 36 days. I'll divide that by 360. So 5 lakhs into 36, divide that by 3. I'm going to get 50,000 as the amount of stock in the raw material. Then stock of work in progress, I've told you it is the formula. You take full of raw materials plus half of direct labors plus direct expenses or direct overheads, whatever name we call. So raw material to I know 5 lakhs into 1 rupee. 5 lakhs into 1 rupee per unit. Right? Now half of direct labor. Direct labor will be how much? Direct labor will be 0.4 into 5 lakhs. 0.4 into 5 lakhs is 2 lakhs. And this will be 0.35 to 5 lakhs. 0.35 lakhs. 1,75,000. So half of 2 lakhs plus 1,75,000 will be 1,87,500 plus 5 lakh rupees of material. 6,87,500 will be the amount. But production cycle is 18 days. That means this is work in progress. So 18 days, divide that by 360, the amount will be 34,370. Okay, production cycle is 18 days, means work in progress is taking 18 days. Next is finished goods. Now stock is of raw material was 36 days and finished goods stock is 15 days. I will take finished goods on cost of production. So what is my cost? 1 plus 0.4 plus 1 plus 0.4 plus 0.35. My cost of production is 1.75. Cost of goods sold or cost of production, whatever you say. Cost of goods produced. Okay, so 5 lakh units into my cost and it is staying in the warehouse for 15 days. Divide that by 3. You will get it in decimals. You can take it up to 2 decimals. Okay, 5 lakhs into 1.75. Divide that by 3. You will get 36,458.3. Okay, and then we will go to the debtors. Last one is debtors. Stock is over, debtors, and then we have cash. Okay, so debtors, it is how much we are giving 45 days credit customers. Okay, so customers are getting 45 days credit. Same thing, on 5 lakhs I have taken cost of production. I have not taken the selling price. 2 rupees is the selling price. Into 45 upon 360, I am going to get 1,09,375 rupees. Now regarding cash balance, they have not told me. They have told me that you have to keep something for contingency. That is okay. That I will come to know only after I will calculate working capital. No, they are telling me cash balance equivalent to 1/3 of the average of the other working capital requirement is kept for contingency. So first I'll have to find the working capital and then 1/3 I can keep it for contingency. So this is the debtors. So total assets, current assets excluding cash is 2,30,208.33. Right. Now in case of liabilities, only one liability I have, creditors for raw material. Raw materials cost we know 5 lakh into 1 per unit. And how much time are creditors giving me? 60 days period they give me. So 60 upon 360. It will be 83,333.33. So my other working capital will be A minus B, which is 1,46,875. Now for this, I will take 1,46,875 divided by 3. 48,958.33 I am going to take as a cash for contingency and add it. And now I will say working capital actually required will be 1,95,833.33. Okay. Okay, 5 lakh units, rupees per unit. And 1/3 of average of working capital, whatever working capital we have got, take 1/3 to provide it as cash. So then we add it to cash and then we say working capital required will be. Okay. So this is your net working capital statement method, second method. Now the next one, projected balance sheet method. Now this projected balance sheet is also same thing. We are supposed to make the working capital, but along with the working capital statement, we also have to prepare the P&L and we have to prepare the forecasted balance sheet. Okay. So the figures in working capital will be a little different of the statement as compared to what they appear in the balance sheet. Okay, there will be certain changes here, and the best example is your debtors. Okay, debtors we are taking at cost in my working capital statement, right? And debtors in case of my in asset side, I'll say take it as the selling price. There will be certain changes here and there, but in the projected balance sheet method also we have to prepare the working capital statement, and we have to also prepare P&L and balance sheet. Okay. So all the forecasted figures they will give it to us. So now this particular question, no, they have asked in December exam 2023. They have just changed the numbers a little bit here and there, and one point they have added. But this is the same type of a question which they have asked. Okay. On 1st of January 2006, we are going to do that past exam question. The board of directors of Littlemore and Company desire to know the amount of working capital that will be required to meet the program they have planned for the year. From the following information, prepare an estimated working capital required statement, forecast profit and loss, and balance sheet. So they have a issued share capital of 2 lakhs, 8% debentures is 50,000, and fixed assets is 1,25,000. Production during the previous year was 60,000 units, and it proposes to maintain the same during this year. Okay. Expected ratios of cost to selling price are: raw material is 60%, direct wages is 10%, and overheads is 20%. Following further information is also available. Raw materials are expected to remain in the store for average of 2 months for production. Each unit of production is expected to be in process for 1 month. Finished goods awaiting dispatch to customers for 3 months. Credit allowed by creditors is 2 months. Credit given to debtors is 3 months. Selling price is given to me 5 rupees. Sales and production follow a consistent pattern, means whatever you are producing, selling. Okay, so that's all they have given. So selling price is how much? 5 rupees. Selling price. 5 rupees per unit. That raw material is amounting to 60, 10 and 20. So raw material is 60%, direct labor is 10%, and direct expenses is 20%. So 5 into 60% will be 3 rupees, 10% will be 0.5, 20% will be 1 rupee. So total cost is going to be 4.5 rupees per unit. Okay, 60,000 units we have to prepare for. Alright. Statement of working capital required forecast. I am going to start with my current assets. First will be stock of raw material. Stock of raw material is staying in the godown for an average of 2 months. What is the cost of raw material? 60,000 units. Cost is 3 rupees, we just calculated. It is staying in the godown for 2 months. Divide that by 12. Since I am doing months, so I will divide that by 12 days, 360. If it would have been weeks, it would be 52. Okay. So 30,000 rupees. Alright. Next is stock of work in progress. Formula is full of raw materials plus half of direct labors plus direct overheads. Now how much is my direct labor? Direct labor will be 0.5 into 60,000, and this will be 1 into 60,000. So 0.5 into 60 is 30, 1 into 60. And work in progress is for 1 month. See, process takes 1 month. So number of units will be like the total cost will be how much? 1,80,000 of raw material, right? Because it is 60,000 plus half of 90,000, 45,000. So 2,25,000, and process is going to take 1 month. Divide that by 12. Okay, divide that by 12. Amount will be 18,750. Okay, work in progress. Next is stock of finished goods. Finished goods we take on the total cost. Total cost is how much? 4.5. How many units we are producing? 60,000. And finished goods are remaining in the stock for how much period? 3 months. Okay, so it is staying in the Go down for 3 months, so 3 divided by 12, 67,500. Similarly, debtors again I am taking on cost only 4.5 into 60,000, and the credit allowed to debtors is also 3 months. So into 3 divide that by 12, 67,500. So total of my current assets is 1,83,750. There is no cash balance given, I cannot write it. Current liabilities, only one current liability I have, creditors. So I am buying the raw materials at 3 rupees, 60,000 is my cost. Okay, and credit allowed is 3 months. So 60,000 into 3 into 2 divide by 12. No, how much is the credit period? Credit period is only 2. Credit allowed to us is only 2 months, and we give a credit period to our debtors for 3. Okay. So 30,000 is my creditors. I know my total assets, my total liabilities is 30. Therefore, net working capital required will be 1,50,750. Okay. All right. Now coming to the forecasted P&L, very easy. Forecasted P&L means we need to know the net profit. So I'll start with my sales. I am doing a sales of 60,000 units. Selling price is given to me 5 rupees, 30 lakhs. What is the cost of raw materials? 3 rupees to 60,000, 1 lakh 80. Direct labor 0.5 into 60,000, 30. And overheads 1 into 60,000, 60. So my gross profit will be 30,000, balancing figure. That gross profit, I am going to take it as by gross profit opening 30. I have my debenture interest that will go in P&L here. 8% debenture interest. So on 50,000, 8% is 4,000. So that is one expense no, in the P&L. This is a trading and profit and loss account type. So debenture interest on 50,000, 8% is 4,000. So balance of my 26,000 is my net profit. This will go in my balance sheet. So in my forecasted balance sheet, issued capital is given to me. Here. Where is it here? No? 2 lakhs rupees. Share capital is given to me. I wrote that. Profit balance I got from my net profit P&L statement 26,000. 8% debentures is also given to me. Fixed assets is also given to me 1,25,000. Now I am going to write the current assets. In current assets there will be stock of 3 types: raw materials, work in progress, finished goods. There will be debtors and there can be cash also. Okay, now that depends. So now my stock of my raw material will be how much? I just calculated, no? Stock of raw material is 30,000, that will go in my balance sheet. Stock of work in progress, again we will take it from the working capital statement, 18,750. Stock of finished goods also from the working capital statement. So all these 3 I am going to get it from my working capital statement. Debtors. Now debtors I will take it as selling price. Selling price is 3,000 into 5 rupees I will do. And then I am allowing debtors 3 months period, so 3 upon 12. 75,000 will be my debtors when I will put it in my balance sheet. In my balance sheet, debtors will appear at selling price. So I cannot directly take it from the working capital. Okay. Creditors, working capital statement. That is all I have to put in my balance sheet. I will try to close my balance sheet. When you will close, you will find this is higher. 3,16,000 to your assets are more. The asset side, when you will total it, it will be more. That means the balancing figure, if you get it on the liability side, you will term it as bank OD. If you get it on the asset side, you will term as cash and bank balance. Okay, this is the last important thing. Okay, where you make the forecasted balance sheet, and based on where the balance is there is a asset balance. Okay, asset side is more than the liability. So you will tally your balance sheet and you will write it bank OD and balancing figure. If your liability side was more than your asset side, your balancing figure would have been cash or bank balance. Okay. I hope this question is clear to everyone. All right. Okay. Now one thing which I just wanted to tell you all. This question number 1 which I did. Okay. Now you all must be wondering, okay, why is ma'am doing per week 1000, and in the other sums ma'am has taken annual production 5 lakh 60. What have I done is, when I took this as 2000, what have I done is I have already done 4000, divide that by, and I'm getting 2000. Okay. That is why in the solution do not find anything like this. There is no division. No, in my I would have had to do 4 divided by 52, like how I'm doing 36 divided by 3. If you will do like this, then obviously it will be 1,04,000 units to 80, whatever will be the amount, to 4 divided by 50. You will have to do. Since the number of units was a little larger and the price amounts also coming more, I first only divided the. You can do the same thing for the other sums also. You can do it for this question number 2 also. We'll take 5 lakhs, divide that by 12. Then you will get it in the point forms. Okay. So try to see what is coming best, because now this is all per month. No? Your sorry, 5 lakhs, divide that by 360. So I have tried to see if I'm getting a good, this is in days, right? Throughout the year, annual sale. 360 days in a 5 lakhs, divide that by 360. You'll get something around 1388 units. So if you're getting a good figure, the amounts are big, you can do it like this also, like how I did question number 1, or you can keep the number of units as it is, and then in the division you will have to take that number of days or number of weeks or number of months, 52 or 12 or 360 or 365, whatever is given in the question. Okay. So your projected balance sheet method is also done. Now comes to the operating cycle. Now what is this operating cycle concept? It is basically the time taken by a enterprise to converting cash back into cash. See, we had cash. We went and we purchased raw material. Then that we put it in work in progress. Then that we had finished. Then we sold it, we generated. Correct? Then we went again, and when the debtors made us the payment, we got the cash, and we went and we made the payment to the creditor. Correct? So this is the cycle, complete cycle. This cycle is known as from cash back to cash, known as an operating. How do we find out the duration of the operating cycle? The number of days for raw material holding, number of days required for work in progress, number of days for finished goods, number of days debtors take to pay, minus the creditors. So I will find out each element. I will get that in number of days. Okay. When I will find each element and number of days, I will add all, subtract the number of days for creditors payment. I will get my duration of operating cycle very easy. But I will need to know the formula. So if I want to find the number of days I'm holding my raw material, like in all the questions they had already given me, that raw materials are in the stock for 2 months or for 18 days, the work in progress, they had already calculated. Okay. Now I have to calculate. So if I want to find out how much is the raw material being holded in the stock, the raw material holding period will be average of raw material upon the cost of raw material into 12, or it might be 50 weeks or whatever, if they have given it in form of number of days, 365, 360, whatever. Okay, so raw materials holding period will be average of raw materials, divide that by cost. Always we will divide by the cost. Okay. Work in progress processing time, that is W. This is R. Now I'm doing W. Average of work in progress, divide that by the cost of goods produced. Okay. Into 12 or 50 or 365. Finished goods holding period F will be average of finished goods divided by cost of goods sold into 12 or 52 or 360. Debtors collection period, average of debtors upon credit sales, 12 or 50 or 360. And creditors collection period will be average creditors upon credit purchase to 12 or 50 or 365 as the case. So when I will find this operating cycle, I will do R plus W plus F plus D minus C. I will get the duration of the operating cycle. This is my duration. Okay. That duration I will multiply it by sales and then divide that by 12, 50, whatever. I will get the amount of working capital required. Okay. Sales in the duration of operating cycle, divide that by 12 or 50 or 365 as the case may be. Okay, so raw material will take on purchases. For work in progress, we will take the cost of goods produced. For finished goods, we will take cost of goods sold. Okay, this is how we are going to find the operating cycle. Simple. Compute the duration of operating cycle for each of the 2 years and comment on increase and decrease. Okay, fine. Assume 360 days in a year. Okay, rupees in 1000, year 1, year 2. Stock of raw material, work in progress, finished goods. Purchase cost they have given me. Cost of finished goods or cost of production is 140. Sale price 160. Debtors is 32. Creditors is 60 for year 1. Okay, I'm doing year 1 first. Okay, year 1, rupees in 1000. So first I will start with raw materials holding period. What is the formula? Average of raw material, cost of. Into I will do now 3 because they have given. Right. Now how much is the cost of raw materials? 96. Cost of raw materials. Average of raw materials remaining in the stock, it is been only 20. Average, we take that only 20 upon 96 to 360. Simple. You will get 20 divided by 96. You will get approximately 75 days. Round it up. Same. Same thing for year 2 also I am doing. In year 2, average of raw material is 27. The purchase cost is 135. 27 upon 135 into 360. 72 days. Work in progress processing time will be average of work in progress, divide that by cost of goods produced to 360. Now average of work in progress they have given me 14 and 18. Is 18, one is 14. And cost of finished goods or cost of production is also given to me 140 and 180. Can be same cost of finished goods or cost of production. Okay. They might give you differently, then we will take it accordingly. If they would have given me cost of goods sold separately and cost of goods produced separately, then I will take cost of goods produced only for my work in progress, because that is the formula here. Cost of goods produced. In most of the cases, they will give you one only figure for both. So 140 and 180 I have. 14 upon 140, 18 upon 180 and 30. Finished goods holding period will be average of finished goods upon cost of goods sold. Average of finished goods year 1 is 21, year 2 is 24. 20. And average of and goods cost of goods sold is the given only over your cost of goods sold. Cost of finished goods 140 and 180. 140. So 54 days and 48 days. Debtors collection period will be average of debtors upon credit sales. I will assume this entire sales as credit sales because nothing else. So 32 upon 160 into 360 for year 1 and 50 upon 200 into 360 for year 2. And creditors payment period will be average of creditors upon credit purchases. Average of creditors is given to me and 18. This is my purchases 96 and 135. I will assume this entire purchase is on credit, right? So 60 days and 48 days. When I will total them all, I will total it 75. This 75, add 36, then add 54, then add again 72. Will get total as 237. From there minus this will be 177 days. We are going to do RWFD. Will add all four and last creditors you will subtract. Same thing we will do it for year 2 also. I will take 72 days. With that I will add 30. Then I will add 48. I will also add 90. And then from there I will minus 40, 190. Therefore, amount of working capital required will be how much? How much is the sales for year 1? 160. Duration of the operating cycle 177. Divide that by 3. Rupees 78.667 lakh is 1000. Right? For year 2, amount of sales is given. Operating cycle I found out. Divide that by 360. 110,000. Okay. So this is how your operating cycle, they will ask you for 5 marks and there cannot be anything going wrong in this. It is so simple. Okay. Now let us do one more question. From the following information extracted from the books of a manufacturing company, compute the operating cycle in days. Period covered, now we will take 365 days. Okay. Average period of credit allowed by the suppliers is 16 days. Okay, so C they have already calculated and given. You have to do R plus W plus F plus D minus C. So average period of credit allowed by the suppliers is 16. Okay. Then they have average of total debtors outstanding is 4,80,000. Raw material consumption 44 lakhs. Total production cost is 1 CR. Total cost of sales is 1 crore 5 lakhs. So this is cost of goods produced. This is cost of goods sold. And this is sales 1 crore 6 lakhs. Value of average stock maintained, raw material 3 lakh 20, work in progress 3 lakh 50 and finished goods is 2 lakh 60. You have to just find the operating. Simple. So let us do it. Raw materials, particulars, working note and number of days. I have written amount in thousands. Raw material holding period, average of raw material upon cost of raw material. Whenever you do amount in thousands, remove the last 3 zeros. Thousands, no? Last 3 zeros we will. Okay. So amount of raw material, stock of raw material holding period will be average of raw material upon cost of raw material and 365 they have given me. They have told me to take it for 365 days. So average of raw material is 320. Okay, 320 and raw material consumption is 4,400 you can say. 44 lakhs, no, but I'm removing, I'm writing the amount in thousands. So last 3 zeros I'll remove. So 320 upon 4,400 into 5. We'll get it in some points. We'll say you will round it up and make it 27 days. Work in progress processing period, they have given me average of work in progress 350 and I will take it on goods produced. That is 1000. Sorry, 10,000. Only 3. 10,000. So 350 upon 10,000 into 5. Almost 12.77. So I'm taking 13 days. Then finished goods storage period. Finished goods storage period will be average of finished goods upon cost of goods sold. They have given me cost of goods sold also. Here COGS. Correct, 10,500. No? And average of finished goods will be 260 upon 10,500 into 3.5. Then you will get in points. I have taken 9 because 9.0 it is. No? So 9 days. Then we have debtors collection period. So I'm going to take debtors amount, average of the debtors outstanding, which is 480. 480. Upon sales, what is the sales for the year? 1 crore 60 lakhs. Okay, that is 16,000. Right? So 480 upon 16,000 into 5. 10.95. So it is going to be 11 days. And creditors payment period they have already given to me, calculated 6. Okay, so my operating cycle will be R plus W plus F plus minus. So add everything first, 27 plus 13, then plus 9, then do plus 11. It will be 60 days. This total is 6 minus 6, get 44. Okay, so operating cycle done. This is also your module question. Now I am moving to past exam question. Okay, for your part A, in your part exam question, only one question. You are done in part B and all that. Now this past exam question, when I will read, it's same like how we solved that forecasted balance sheet. Only they have changed the amount. XYZ Limited is a company manufacturing standardized chandeliers. Segment, the segment they deal in is more or less an oligoplastic kind of market with mediocre market potential. Demand for their product has been wavering fast, but owing to increase in economic level of middle class in India, the board of directors is confident for the bright days. It's all history geography. On 1st of April 2023, the board of directors of the company is desirous to know the amount of working capital that will be required to meet a planned level of operation for the year 20. Following details have been given. Issued share capital 2 crores. Over there it was 10% debentures, 10% thousand. Fixed asset was 1,25,000 year. Production and sales during the year is expected to have an average out to 50 units per month. Okay. During the previous year, the ratio of cost to selling price are also likely to maintain current year. 3%, 10%, 20%. Following information has been provided in this regard. Raw materials and components are expected to remain in the store for an average period of 2 months before they are issued for assembly and production. So this is for the stock of raw material. Months. Each unit is expected to be in process for finished goods stay in the warehouse for an average period of 1 month. Suppliers of raw materials extended an credit of 1.5 months. Creditors, stock of finished goods, this is work in progress. 80% of sales are on credit, and though credit extended to the customer is 2 months, we are giving them 2 months time. Average debtors collection period is 75. On an average, overhead of 2 weeks in outstanding. Selling price per unit is 5,000 rupees. Work in progress cost involves 100% of material, 3% of labor and overheads. This is what we do. Raw material plus half of direct labor plus direct expense, direct overhead. Sundry debtors to be valued at cash cost price. Entire overhead cost is assumed to be a cash. 1 year is equal to 360 days, or it can be 50. Assuming production and sales follow a constant pattern, you are required to compute the working capital required at 10% of your figure as contingency. Prepare a forecasted P&L and a balance sheet. Okay. So statement of working capital required. Now first tell me one thing. How many units am I producing? 500 units per month, right? So here I am producing 1000 units for the whole year, right? My selling price is 5000 unit rupees per. So my raw materials will be how much? 3000, then 5000, 10%, 500 rupees, and 5000 into 1000. So my total cost will be how much? 4500. My selling price is 5000. All this is important. I have just now I will start with my working capital statement. I'll start with my current assets. In current assets, first will be my stock of raw material. How many units are we producing? 6000. Now, if you would have not done this 6000 and kept it as 500 also, it would have been fine. 500 into 3000. Then you would have just done 2. Multiply by 2, not divide by 12. You will get the same answer. But I will suggest that you take it like this only, because sometimes you have to divide that as per months, sometimes as per weeks, depending what is given in the. That's why what I did is I removed annual production. Okay, so try to do it annual production only, and then depending on how many months they are staying in the warehouse, or how many weeks they are staying, or days they are staying, then based on that you can. Okay, always remember this. You will find all this type of things in your module. May come it as a surprise. It will come as like, ma'am, why they have taken this as 500 now here? But you have to see they have taken 500, but then they have not divided by 12. Okay, but in your past exam question, in your model answer, they are doing exactly what I am doing. Okay, so please try to stick to this method. So 6000 units I am going to produce it annually. Cost of the raw material just calculated 3000. They are going to remain in the store for 2 months. 1000 into 1000 divide by 12. Simple 30. Stock of work in progress is going to full of raw material, half of direct labor and direct. Now, what is the full amount of raw materials? It is 1000 into 1000. 180 crores. Oh, sorry, 180 lakhs. 1 crore 80 lakhs. 180 lakhs. Plus half of what will be my direct labor? 500 into 6000 units. 1000 is going to be 30 lakhs. And 6000 into 1000, it will be 60 lakhs. Lakhs plus 30 lakhs is 90 lakhs. If I am doing 90 lakhs, I have to divide that by 2. I am going to take half of it, 45 lakhs. So 45 lakhs plus 1 crore 80 lakhs give me 2 crore 25 lakhs. And work in progress is for 15 days only. If I am taking days, I will then divide it by 360. Why? Because they have told me. Where have they told me? Unit 360 days. Here, 360 days or 50. Okay. So 360 days if I'm taking, so 2 crore 25 lakhs into 15 upon 360, it will come as 9,37,500. Okay. Then I'm taking you all to the stock of finished goods. I have just kind of, because there was one small mistake. I did that first as debtors and then I did stock of finished goods. I'm taking you all to stock of finished goods. We all know we take stock of finished goods on the total cost. Total cost we calculated is 4,500. Number of units 1,000. 6,000 into 4,500 and finished goods remain in the warehouse for 1 month. Simple. 6,000 into 2,500, 1 upon 12, 2 lakh 50. Now for debtors. Okay, debtors, 80% of the sales are on credit. Right. So that means number of units which I am selling, 1,000 in a year. In that only 80%, 1,000, only 80%, that is 4,800 goods are sold on credit. Right. And I am again taking the cost price, which is 4,500. They are saying we are allowing 2 months time to the debtors to make the payment. Okay, so ideally it should be 2 divided by 12. But I am getting the collection in 75 days always. So I will take 75 days only, no then. I'll take 4,800 into 4,500 into 75 upon 360. You can then write a note of this. That since the average collection period is 75 days, debtors is calculated based on 75 days. So 45 lakhs will be my amount of debt. There is no cash given to me. So my total current assets is 1 crore, 1 crore 6 lakhs 87,000. In my current liabilities, I have suppliers of raw materials. I have creditors. I have on an average overheads of 2 remain outstanding. I have overheads also. Okay. So sundry creditors will be 6,000 into 3,000 is my raw material cost. On an average 1.5 months divided by 12, 22 lakh 50. And overheads are for 2 weeks. Now since it is week, I'll divide that by 450. They have told me. So how much is the overheads cost? 1,000 rupees. 1,000 rupees is the cost. Right. So 6,000 into 1,000 to 2 divided by 50. 2,30,760. Add this to, you are going to get the total of your current liabilities, which is 24,80,000. So from 1 crore 6,80,500, if I subtract 24,80,000, I'm going to get 82,06,730. They have told me add 10% of contingency to this. So 10% contingency will be how much? 10% of 82 lakhs will be 8,20,673. Therefore, working capital, estimated working capital required will be your net current assets, which is your current assets minus current liabilities amount, A minus B, plus this 10%, it will be 90,27,400. Okay, this is your working capital, 90,27,400. Now P&L and balance sheet is very easy. P&L, I will start with sales. How much sales I am doing? 6,000 units per year. What is my selling price? 5,000. They have given it to me. Right, so 3 crores. Raw material cost is 3,000 for 6,000 units, 1 crore 80 lakhs. Direct labor 500 rupees in 1,000 number of units, 30 lakhs. To overhead 6,000 into 1,060 lakhs. So my gross profit is going to be 30 lakhs rupees. That gross profit, I'll take it here by gross profit carried down. I have one small debenture interest here, 10% on 50 lakhs, 5 lakhs. 10% on 50 lakhs is 5 lakh rupees. So my net profit is going to be my balancing figure, which is 25 lakhs. Now this 25 lakhs will go in my balance sheet. So my forecasted balance sheet, share capital given to me. Where your crore. I wrote it. Net profit, I took it from my P&L statement. Profit 25 lakhs. 10% debentures, 3 lakh rupees is also given. Fixed assets 1 crore 25 lakhs is also given. Now comes my current assets and my current liabilities. I am writing my current liabilities first. Okay, creditors and outstanding overheads. Take it from the working capital statement. How much is my creditors? 22 lakh 50,000 and outstanding overheads is 2 lakh 30,769. Simple working capital statement. And current assets is 3 stocks, debtors, right? Cash is not given to me. So which are my 3 stocks? Raw material, work in progress, finished goods. All I will take from my working capital statement. Only debtors I will not from working capital statement. I will put my actual debtors which is on selling price. So 4,800 units I am selling on credit. At 5,000 rupees is the selling price. 75 days, divide that by 360. You are going to get 50 lakh rupees as debtors. That is all I have in case of my information. All, that is it. Now when I will total my liability and asset, my liability side is going to be more. It is coming as 2 crore 99 lakh. 80,760. Liability is coming more. Therefore, the balancing figure is the cash and bank balance 62 lakh 90,000. In our previous sum, we had got a bank OD of some 10,000. Now in this sum, I have a cash or bank balance. So that is it. Like only a few things you have to understand, that you are writing everything. Like say now if I want, I will give you all here say notes. In notes, what all you will write? Notes you will say 500 units. Okay, produced monthly. Okay, so yearly will be how much? 500 in 1000. Then you will write raw material cost 3000. You will write direct labor cost 500 and direct overheads cost 1000. All this is per unit. Okay, so you're just writing your working notes. I'm just showing what we have all. Okay, then I will say debtors for working capital statement taken on cost price. Cost, they've already told us how much is the cost. 4,000. Okay, total cost is 4,500 per unit, right? Then you can also say that debtors for balance sheet is taken on selling price, which is rupees 5,000 per unit. Balancing figure, okay, of the balance sheet is assumed to be cash and bank balance. That's it. That is it. Okay, if you will see your this model answers, they have on the asset side only they have done current assets minus current liability, means the entire working capital statement they are writing in the asset side only. The creditors, overheads, everything writing, and then the balancing figure is cash balance. I don't prefer to do that. They have also written that we can do it as we feel comfortable and we feel okay with. So I write my liability side, I write my asset side, and then the balancing figure depends whether it comes on the liability or on the asset side. I will term it as OD, bank OD, or cash and bank. Simple as that. You don't have to get confused at all. Okay, so this was your past exam question. All right. So basically, in case of part B of your working capital management, all what is important from your exam point of view, that is practical questions, are this types. Forecasting your net current assets is current assets, current liability, projected balance sheet, and our operating cycle. We have done all the three. I have explained you all each and every point, okay, for all the sums, and we have also solved the past exam. So with this, we complete the entire working capital. Okay, so your first video and this video will form the entire chapter. You can open your module and you can try to solve any sum. You will be able to do it because most of that I have taken it there only. Okay, so with this we complete working capital statement as well as a marathon chapter. Thank you everyone for staying along with me, and all the best for your exams.